Hi everybody and welcome back and welcome you all to our YouTube channel today. So today's video is about on an introduction to investment. Why do we invest? What is investment and what are the basics of investing? Now, I'll be taking all of you guys through what is investment and also throughout the contents of this investment course that will be posted on our YouTube channel. Please do watch out for the other videos into learning a bit more on how we as investors use this world of investing to figure out more on how we spend our time making decisions on what to buy and what not to buy. So the investment is the act of putting money or resources into an asset or security with the expectation of earning a form of profit or income in the long run, in the short run, essentially in the future. So involves sacrificing current spending to gain potential financial benefits later on. Usually the aim of investments is to grow wealth, either through capital gains, capital appreciation, so the known as the rise in the increase of the asset price, or regular returns such as interest payments, dividends, which you guys will learn more about in the upcoming videos, in the future videos later further down in the course. Now, common forms of investment will include stocks, bonds, real estate, mutual funds, ETFs, cryptocurrency, etc. All this will also be covered in later videos. And all investments carry some level of risk, and usually returns are related to the level of risk taken. You know the famous phrase, high risk, high return, high risk, high reward, usually applies when we talk about investment. Now, why do people invest? As we mentioned a bit earlier, is to grow wealth over time, building up the amount of stock of wealth you have with you, so that in case of any financial emergency, you guys can use. We as investors have some form of backup and some form of wealth that we can sell off just in case if we need financial stability or help. Also, many investors invest to beat inflation, so to ensure that their money does not lose purchasing power. Because when we invest in the assets, usually inflation is the rise in the price of goods and services within a country. So then if you invest in, let's say, property, houses, and the rise of, there's an increase in the price, meaning increase in the price of your asset as well, you ensure that your asset value is growing along with inflation. So other forms of investment could be, to achieve financial goals such as education, buying a house, retirement, generate passive income through dividends, interest, or rental income. So these are forms of payouts through investments that will again be explored in later videos, and also to build financial security to prepare for future uncertainties. Now, types of investments mentioned earlier: stocks, bonds, mutual funds, real estate, fixed deposits, many more, cryptocurrencies, CDs, known as certificate deposits, a lot more, that commodities, for example, exchange traded funds, that will be explained in some sort of generally in later videos. Now, let's take a look at risk and return. So risk refers to the possibility of losing some or all of the invested money. Most investments come with this risk. So for example, it's either you lose the entire sum of the money you invested if the company goes bankrupt or the investment becomes zero, or lose maybe some if you manage to sell it before the price drops too low. So a return is the profit or income earned from an investment. So most of the time, as we mentioned earlier, the aim of investment is to get a form of return somehow. So usually, as I mentioned, higher potential returns usually come with higher risk, the famous saying. Lower risk investments tend to offer more stable but usually lower returns. So how do we as investors diversify our portfolio? Now we got to understand the concept of risk and return. Why is that? So that when we choose our investments, we choose over a broad range of investment types. So we mentioned here the types of investment. Each of these are linked to different types of volatility, different types of risk, different types of returns. And here's an extension for some of you if you guys are interested in learning about the different types of risk involved with each type of investment and the value of that risk. It's really important that you guys can do your own research online about this. So again, investors should learn how to diversify, balance their risk and return based on their goals and risk tolerance. Now, this competition highly focuses on getting a specific targeted return. So investors, you guys should be able to draft your portfolio in a way that balances the risk and return in a worst case scenario. Don't put all your eggs in one basket, too risky and also too low risk. Thank you, and hope you guys learn more from the future videos.